Hi everyone, welcome to today's trade of the day. And for today's trade of the day, very quickly, I'll be looking at the Kiwi dollar. Now, this is going to be a short video, but only because there is a very, what I think is a short-term intraday opportunity, right? So with that, let's quickly dive into the charts. So what I want to do is I want to start off with the 4-hourly, okay? And 4-hourly, graphically speaking, we have a support around this level. All right, I will choose this level. Okay, where's my support? Yeah, so this will be for me my 4-hour support. Okay, and why I chose this level is because if I change to close, this is actually the lowest point. And we actually see that price tap here, here, okay, price opened below, however, quickly rejected above, came close once, price opened right at this level and bounced again. Okay, so this for me is a good support, all right, the 63.94, right? And at the same time, we see that price made a high, and another high here. Now, if we were to connect all these highs, okay, let me just draw a trend line, okay, connecting all the highs. Okay, what I have is a descending trend line resistance where price tap once, twice, and a third time. Okay, be sure that when we draw a trend line, it's fine to cut off some wicks, all right, but never ever cut the body of the candle, right? Never ever cut the body of the candle. Okay, so what I'm thinking price could do on the 4-hour is that price already rejecting the support could make a push up at least to the descending trend line resistance, right? And we see that price made a high here and a low here. Okay, we can use a retracement of this entire move from the high to the low, open all Fibonacci ratios. Okay, we see that the 7860, all right, the 7860 level is falls right in line with the trend line resistance. Okay, with the trend line resistance. So I'm just going to put it here. I'm going to put a resistance level. Okay, let's call this our 4-hour resistance. All right, so of course, this is an intraday opportunity. Okay, on the daily, this becomes a very ugly pattern. Okay, on the 4-hour, we see a descending triangle pattern. All right, which could very well become a continuation. But triangles, we should always wait for the breakout. Then we play the direction of the breakout. But that doesn't mean we just sit idly and do not take any trades. Okay, within the triangle, we can still play the trades. All right. So on the 4-hourly, okay, this is at least what I'm expecting price to do. Okay, and let's quickly go down to the 1-hour. Okay, and the 1-hour, same thing, right? You see that the wicks are touched. It's okay to cut the wicks, okay, but as long as we don't cut the body. All right. So this is the configuration for the 1-hour is the same as the 4-hour support, right? Now the question then lies, where is the best point for entry? All right, so on 1-hour there are a few points of entry. Okay, one for the really low risk people. Okay, for the really low risk, where you want to wait for confirmation. All right, then you wait for price to break above this high. And once price is above this high, okay, you can enter the trade and just play a short push up towards the 4-hour resistance. Now, for those who have a higher risk entry, okay, what you can do is you can actually wait for price to come back to the 4-hour support. Okay, I'm not saying that price will, but I'm saying that there is a chance that price can come over to the 4-hour support, and then you can go long and play towards the 4-hour resistance. All right. Ultimately, if you are uncertain whether you want to wait for the buy entry or the 4-hour support, if you want to enter now, that too is a possibility. Okay. Sorry, I have no idea why I selected the negative 27. But so the question now then lies, okay, this is I'll put a change the buy entry for high risk. And this will be the buy entry for the low risk. Okay, the question then is, where will my stop loss be? Right, on the 1-hour, we actually see that price made sort of a zigzag manner. Okay, so we can actually use Fibonacci extension to see how far price can go. Okay, so 0.1 to 0.2 to 0.3. Let me just adjust the 0.2. Okay, open all Fibonacci ratios, and we actually see that the 100% is over here. So I'm just going to highlight the 100%. We know that in an extension, 100% is always key. Okay, so where I'll put my stop loss is just slightly below the 100%. Okay, anywhere below. Remember, the stop loss is the level which you know that your idea is definitely wrong. So why I don't put it here, okay, is because it's too close to the 100%. I want to let my trades breathe a bit. Why I don't use it here is because this is actually, of course, this is a buy entry for high risk. So I'll put it somewhere below, right? I'll just put it somewhere below, anywhere below, not too far, okay? But just close enough, yet below. Okay, so should price actually come down, break below the stop loss, and close below the stop loss, it would mean that on a 4 hour, price has broken the descending triangle pattern to the downside. Then I'll get ready to go short. All right, so for presentation's sake, let me just zoom into the 4 hours and change this 4 hour resistance to the take profit. Okay, so thanks everyone for tuning in to today's short and quick video. I believe that I put some important concepts of trend line and stop loss in there. Okay, hope to see you guys soon and catch you guys tomorrow. Take care.